Hi, folks. We have another outstanding panel for you today. With Payments Canada and the Modernization Project, we've been putting a lot of effort into building new rails. This panel will discuss how we think about the future of how we will use these new rails. New trains and new destinations, certainly ones that are COVID-free would be preferable. We will discuss how we can leverage these new rails and how we need to think about the use of new technologies, richer sources of data, and the preconditions that need to be in place for success as an ecosystem. So today, I'm joined by an outstanding panel. We've got Vinay Prabhakar, VP Product and Corporate Marketing, Volante Technologies, Dougal Middleton, VP Enterprise Payments at Scotiabank, and Asad Joheb, Business Architecture Executive, TD Bank. So we've got prepared remarks for about 30 minutes, and then after that, we're going to launch into a Q&A session. So feel free to pop questions into the Q&A throughout, and the moderator will be pushing questions back to us. So with that, we're going to start with Vinay, who's going to kick us off on some thought-provoking observations from around the globe that are outlining the challenges and opportunities in driving payments innovations on modernized rails. Vinay, over to you.
Sure. Thank you, Todd, and great to be here. I certainly hope, speaking off the globe, that the next time we're doing this, we're in the same place in the globe, rather than remotely. I think we're all ready for that type of change. You used a quite important word there, which is innovation, and that's certainly a topic that's close to our heart at Volante. Innovation, by definition, means it's something new, right? And that's really the core of how we work with our own customers. We help our customers innovate by freeing them from the limitations of legacy. We do that as a provider of payments technology, payment solutions, mostly on but also off the cloud, to banks and FIs globally. What we find pretty consistently in the markets in which we operate, which today is pretty much all the markets where there's a lot of modernization happening. So in addition to Canada, of course, US, Europe, Middle East, LATAM, South Africa, the thing that banks have the most difficulty with, maybe not banks, players in the ecosystem, right, have the most difficulty with, really is that innovation bit. It's coming up with something that is genuinely new in the process, because it's pretty rare that there's opportunity to do something new in payments, right? In most of the regions in which we work, we've been working with the same rails, right? The same gauge widths and so on, to extend the analogy, for decades. And that can be a kind of a challenging change in mindset. And that's an evolution that we've seen a lot of our customers and players in the industry go through, which is the first step towards innovation when it comes to payments modernization really is that change in mindset. And I'm going to throw something out there, which, you guys might agree with or not. Something that we've often said in the industry, I've said it many times, I'm sure many of us have said it, is a payment is a payment is a payment, right? You guys have heard that before, right? Probably said it. I'm beginning to think much more and more that that's not true. A payment is not a payment. A payment is a customer experience. And that's really the mindset change that has to go with modernization. Because if the approach is, we've got some rails and we're going to get new versions of these rails, but we're going to run the same trains, we're not really delivering new customer value. And having the back end, the modernized rail in the back end itself, that in itself isn't good enough, right? As a bank in particular, you need modernized technology infrastructure to take advantage of those rails. Now, for the larger banks, some of the folks in this panel, for example, maybe a little less of a challenge, right? You guys are essentially technology companies with banking licenses, right? Very advanced in the technology department. But for smaller institutions, who don't have the IT resources, it really is a challenge. And that's where we actually see, organizations going out on a limb, smaller institutions who maybe would never have tried running payments in the cloud, saying, this is what we have to do. I'll just leave with one anecdote from Europe, just to kind of bring it into focus in terms of what some of these challenges are. As you know, instant payments in Europe have been around for 3 or 4 years now. Lots of organizations started in a receive-only mode, right? with SEPA Inst, which was fine for the volumes that they were testing. But as volumes have gone up, what they've realized is that those really tight instant payment SLAs, it's under 10 seconds nominally, but really it's got a clear a few seconds, no longer work. So they're actually going to have to go, they're actually in the process of changing the technology they already thought they replaced in order to handle instant payments. So it's really part of that big picture, changing mindset, but also changing technology approach. But I think in the end, that is the key to innovation.
Well, that was really enlightening. So, Asad, you come from an organization that prides itself on legendary customer experiences. So it'd be great to hear from you in terms of how you're thinking about customers in Canada are going to ride these shiny new rails and shiny new cars, and let us know where we're all going to be going.
Thanks, Todd. Yes, we're indeedly proud of our legendary customer experience promise. So overall, if I can summarize, it would be an expectation of value in general from the payments. That's what would be generalized statement. The reason I'm saying this is generalization because different customer segments would be asking for different types of value from these rails. Let me take the cohort of our business and commercial customers. So they will be expecting more operational efficiency type of value out of these new rails that are coming in, whether it's in the form of enhanced liquidity management or managing their liquidity through day to day, enhancing the reconciliation process for easier accounts payable and receivable reconciliation. So those type of services. If I look at the retail segment, consumers like all of us here, we would be looking for convenience is a primary thing, and then solving our day-to-day problems like, hey, I forgot to pay my bill, so last-minute urgent bill payment. Or some of us are participant in the gig economy, so we'll be expecting our getting paid on a real time. So the expectation you see a little bit different from a customer experience and customer expectation point of view, and we're expecting the new rails, whether it's the real-time rail or with the enhanced of other rails that we are going through, would be delivering them. At the end, I would also like to suggest that, as you rightly mentioned, these are rails. So there will be different types of trains, different types of vehicles will be running these rails. And the closest analogy that I can get from these vehicles would be the overlay services that we'll be seeing. We'll be seeing a slew of overlay services that will be actually creating the ultimate value. The same set of tracks can run a goods train, can also run a superfast passenger train. So those are the different types of overlays that will be riding these rails and providing the ultimate value to whether it's transporting goods or transporting passengers. Another great point, another very important point I do want to mention is the expectation of getting the value or squeezing the value out of the data that we will be seeing running through these rails. Some of the older rails did not carry that huge amount of rich data, and with ISO 20022 being ubiquitous around all the payment rails, we would be seeing more and more data coming. It's not the data that will create the value and customer delight. What are we doing as a bank with this data would be creating that delight of the experience. So, summary, different customer types will have different values out of it. Data would be key. Other boring things like automation, operational efficiency would be also key, and we might be getting some out of it from these rails as well. So an end-to-end holistic view of what these rails would be doing for the bank, for the customers, and any other parties that's involved, whether it's our partners, whether it's our software partners like Vinay and other teams. So that would be important to extract the full value out of these rails. Let me pause there, Todd.
Thanks. So, Dougal, hopefully some of these trains take us back to Scotia Arena at some point. And so love to hear what you're thinking that are your corporate and government clients. Beyond going back to Scotiabank Arena, what are they going to be looking for in this future world that we're quickly moving to?
Yeah, definitely, Todd. I think in the corporate and government space, those upmarket segments, top of mind, as Asad had mentioned, is really efficiency. But I spend a lot of time partnering with our sales teams and getting out on client calls to really listen to what's top of mind these days, given the accelerant that's been injected into those business models in terms of the transformation to digitization, et cetera. There's a lot on companies' minds and entities' minds, but fundamentally, the needs that we continue to hear from clients are really threefold: efficiency, security, and help. And the efficiency really comes back down to the cash and treasury management side of these businesses and the adjacencies around accounts payable, account receivable, really being forced to do more with less over the long term historically. And now with this accelerated push to digitization, they're looking for a lot more of that digitization and efficiencies gained through products and services that actually drive end-to-end efficiencies, and not necessarily about replacing, a one-for-one, take the old rail and replace it with the new rail, or use the faster horse mentality. Customers may think they want a faster horse, but the reality is that it's about getting in a new car with a combustion engine or electronic vehicle, whatever it might be, to get you to that end destination in the journey, right? Scale is obviously paramount in this sector, in this segment. The volumes of transactions that they deal with, tens of thousands, hundreds of thousands, naturally will create overhead when you run into exception handling and exception processes. And anything that they can gain from digital journeys and digital services that help eliminate that friction associated with that overhead and that burden of exception handling is a massive win on their side, especially when you start to look at things like getting paid. When companies of this size start to get paid en masse, the three-way match routines, the account reconciliation, finalizing cash application processes to be able to get access to that liquidity that's hit their account. There's so much efficiency to be gained there because of these data-rich on-demand services that are starting to come about. It's a crucial component of the solution set for these types of clients. I think the reality is with this market, the transformation is vital to the competitive stance in a lot of the different sectors that are going through transformation right now. And being able to deliver a better digital experience for their customers, whether it's consumers or other businesses, it really hinges on a frictionless payment experience. It's a really, really good spot for them to kind of not only gain some efficiencies, but gain some potential competitive advantages to drive client retention, et cetera. Security-wise, top of mind, obviously, in a lot of entities' minds these days, but this sector in particular is very, very acutely aware of the security and cyber threats that we're all collectively up against. And they're really looking for anti-fraud services that help protect them against this heightened level and varied number of threats that are out there these days, without impeding the regular flow of their business, right? So it's one thing to offer services that stop payments for a double check or a four eyes type activity. It's another thing to do it intelligently behind the scenes so that the money continues to flow, and ultimately the transaction is a trusted activity from soup to nuts or end to end. And thirdly, touching on the help piece of it, because this market is so varied in its journey and in the state of its transformation. For every customer I meet that's sort of at the forefront and looking for the next best thing in payment services, I meet another one that's just beginning to start to conceptualize what the realm of possible might be in their digital journey, and really starting to look for how banks, software partners, and other entities in their ecosystem can help them along this digital journey. Just to illustrate that a little bit, you look at the laggard side of the spectrum. I was literally really recently asked a question and sort of, why would I shift to a digital payment when a check can be way more secure than an electronic payment mechanism? I can return a check because the existing rule set allows me to do so. It's that type of mindset that is a real barrier in this market space, and it's not really about replacing that check with an electronic mechanism and looking at the delta of the behaviors or the rules of the rail, so to speak. It's about looking at the rationale and the reason to pay to begin with, thinking about the end-to-end journey, and really figuring out where the digital services can start to enable the value throughout that journey is really the critical piece of it. One thing's for sure, it's abundantly clear the segment's absolutely thirsty for information, given the recent focus and increased focus on digitization, and they're demanding more and more guidance about how to apply the things that are coming into market to benefit their digital value case.
Hey, Dougal, that's a really great segue to my next question, which I'll push to Vinay. Like, we've all got a lot of passion around what the future could be, but there's some real barriers that need to be overcome. Vinay, maybe you could talk about how technologies and processes allow us to overcome these barriers to reach this great future.
Yeah, absolutely. I think the barriers are really in two areas, right? And it's important to understand that when we look at barriers, it's hard to truly separate technology barriers from business barriers and vice versa. So I'll spend a little time on the business barriers, but really more focused on the technology side. But again, on the business barriers, to my point earlier about a change in mindset, right? I think to innovate, to modernize, it is important for banks to look at how they're constructed and organized around service delivery. So there are a couple of things that I'll highlight here, right? One of them is the traditional business case process, which you guys certainly are very familiar with. It isn't actually designed for innovation and agility, right? It's designed to slow things down, to make for measured decisions and so on based on numbers. The challenge is that it's very difficult to create traditional business cases for things like, let's say, real-time payments or even, ISO 20022 based services, because there isn't a clear notion of what the revenue models will look like. Even today, a few years into modernization in many countries, pricing structures are all over the place. If you look at, let's take Singapore, for example, which rolled out Singapore Fast a couple of years ago. The pricing structures of banks there for those services in year one are completely different, from the pricing structures that are in existence now, because of what they've learned from the market. The other thing is that costs are also dependent on volumes, which are unpredictable, right? You don't really know what your volumes are going to be and how are they going to shift from payment type to payment type. So as an example, again, using a real-time payments example, faster payments in the UK, about a dozen years in. So in the first couple of years, that was growing about 60%, okay? That growth has moderated, but even with that growth, faster payments is still about only 20-25% of UK payment volume. So it's not like it completely took over, all the other payment types. Now, will it be the same volume pathway in other countries? It's a different curve in Europe. It's a different curve in the US. It's really hard to tell. Let's switch to the other side, which is technology, right? Certainly, the banks that we tend to work with have realized that the biggest barrier to their ability to innovate is the technology, specifically legacy technology. And that's where we have a strong track record in terms of working to free them up from those limitations. And the key realization is this, right? It might be possible to improve a legacy system in one area. Let's say to figure out a way to make it handle ISO 20022 or to API enable it, right? It's very difficult, I would say close to impossible, to make current systems or even current hubs API capable, ISO 20022 fluent, real-time, 24/7, cloud capable, services oriented, and all the other things that you need to deliver the customer-centric experiences that Asad and Dougal have been talking about, right? At the same time, it might not be an option to just replace all legacy or start from greenfield, although some banks have done that by creating their own digital subsidiaries. So we've had a lot of success with providing banks with what I call a right size approach to modernization, which takes a different shape depending on the bank, right? In some cases, it might mean that the bank goes de novo for real-time payments. They put in, our cloud-based service for real-time payments as a new capability. But for other payment types, it's more taking pieces of technology and services to act as an ISO 20022 integration layer. In other cases, it might be things like leaving the legacy systems where they are, but centralizing validation and orchestration of transactions. Because then what the legacy system does is really, it just connects to the clearing switch. So a lot of different approaches, but ultimately, legacy technology is definitely the barrier that banks come up against. And that's the one that has to be solved if we want to get these trains out there running faster.
Oh, it's a great deep dive into looking at it at a financial institution level. Dougal, I'd ask you to zoom out a bit. And what are the actions that we need to take as a total ecosystem to enable us to make the best use of these new rails so that we can run high-speed trains where we need to and low-speed trains where we don't need?
Yeah, I think it's interesting, some of the things that Vinay was talking about there in terms of adoption in other markets. there isn't an endpoint, I don't think, where the only thing that exists is a faster payments rail and maybe an RTGS for central bank money. There's always going to be a space for some of these other things like batch-based processes. There's a lot of business problems that have been historically solved with those type of legacy quote-unquote payment rails. And it's about the advent of these new ones and where some of those, I guess, not quite fit for purpose solutions might be better off in the new space. But the first thing that really comes to mind is sorting out sort of where are our levers for ubiquity. Ubiquity drives consistency, and when end users can rely on consistent behaviors, not necessarily about the experiences, but the behaviors of a construct of a payment moving from endpoint to endpoint, we can drive the adoption from it because they know that sending from point A to point B is going to equal the same thing as sending from point C to D and on and on. And that drives the ecosystem benefits from it when we can all kind of rely on that common sort of ubiquity and functional sort of experience. Setting consistent standards and from there deriving better market practices, I think, is an important piece of this, especially in the case of ISO, where the message structure is so massive. There's so many different ways that you can represent a business entity or a given use case. But there's some things I think that can be done to make sure that we can collaborate on what is the best market practice to represent given use case, so that we don't run the risk of propagating some of the problems that we've experienced in the past that have really driven things into very niche plays. Like take EDI as an example. I know it's a bit of an easy one to pick on, but without defined market standards, you end up getting communities deriving their own things, and you end up getting this very varied, fragmented behavior in the middle of it. And the ecosystem has to constantly try to be flexible and adaptive. And I think you lose the innovation advantage because of the lack of adhered to practices and that are built off of really strong standards. So really, like, not just about ISO, but it's really about looking at message formats, QR code standards, API standards, etc. There's opportunities to set these market usage practices that will really help the vendor communities that support our end users, as well as the banks, as well as the networks, really standardize on some of the non-competitive areas, so that we can really focus on greater innovation at the endpoints. Notwithstanding, we look at a lot of the regulatory drivers that the ecosystem's tasked with these days, largely in the FI space. Is a big part of this, but the regulatory changes that get introduced really have to align to the capabilities at the center, and when they're disjointed, that drives even more fragmentation, because you all of a sudden have participants having to keep up with a reg, and they may not be able to deliver that end user value because they're chasing a reg requirement over here that doesn't actually align with what's happening on the new rail, as an example. This ends up putting the ecosystem at risk, or putting participants in the ecosystem at risk, and it starts to drive rash behaviors or potential issues where we start to disrupt the ecosystem because we make decisions on rejecting payments because we're deeming one entity to be out of line when another might not be, right? And lastly, probably more importantly here, we're on a massive adoption sort of journey here, and it's going to be tough to get the market. I touched on sort of the dynamics of the corporate segment and the varied path to modernization that they're faced with. But driving adoption from an ecosystem perspective is super important. I think one FI can't do it alone. One sector of vendors can't do it alone. We have to really come at this from a collaborative, ecosystem-driven way, and really solve some of those fundamental education challenges that still remain out there, using that check example that I called out, and really getting a collective commitment to make that push and figure out ways that it makes the most sense for us to collaborate to do that.
Really well said. Like, it takes a whole community to make this work. But Asad, some of the things that we don't talk as much about is the architecture that really powers this new future. We talk a lot about the widgets that we need to put in, but just like we need an ecosystem, we need a powerful view of how architecture can unlock some of these opportunities, and that's where you spend a ton of time. So I would love to hear your views on how the architecture of the future can unlock more of these opportunities.
Sure, Todd. Thanks. So I'll pick on two words from there. Ecosystem. That's a very important word, and architecture obviously is a very, very important word. We generally internally in TD we use 4 words to define the vision of our payments platform, that ecosystem: trusted, modern, connected, and green. These are the 4 words we use, and I'll explain why we use them. So trusted, for sure. There is no doubt about the architecture that we put in have to be trusted in terms of safety, security, resiliency point of view. Dougal touched upon on that piece, and it's critical to our bank's success. It's critical to our customer success to be safe. Trust is the key. The trust is the business we're in. Our CEO says, and I totally agree. And that's the most important point that we banks bring in. In terms of modern, I would take away a few elements of what Vinay was touching upon earlier. Legacy is certainly it's there, and it's not going anywhere soon. Like we all banks have a legacy infrastructure. So modern, when we say modern infrastructure or architecture, we don't want to convey the message that we want to modernize everything up, like uproot all the legacy, get it out of the door one day, and bring all the new technology in, because that's not successful. Because today it's modern, tomorrow there's something will come in. So when we are designing the architecture with our technology partners along with our business folks, what we are thinking is what's meaningful to solve the customer problems we have today, whether it's the problem of bringing in a new product in the market or creating a new excitement for our customers. What's the optimal architecture that should be standing behind it? And then work together to develop and mature that architecture to that certain point where we can deliver the value to the market. It might mean a mix of capabilities and assets from both worlds: legacy, distributed, cloud, whatever you may say from a technology point of view. And from a business lens, we always think about capabilities. And as you introduced me as a business architecture person, I mean, that's one of the key things that we have brought into the payments platform is the lens of capabilities. Whatever we do, we have to build net new capabilities, and going on, we have to mature them as we progress. So that's the theme of our entire practice in payments. Let me touch upon the word connected. As we grow and bring new capabilities in payment, connectivity is key to realize the full benefit of all the assets that we're putting in. As Vinay was saying, payments is a payments. I agree to that statement. However, payments cannot act alone. We need authentication. We need fraud detection. We need whole slew of other platforms around it to make our payments safe and secure. So connection to those things are important. Connection to other partners are key as well. And payments is successful as a network. So if we are not building that network, that ecosystem around that are in the architecture, it won't be a successful payment product. So connection is important. And lastly, also the green component that's getting very important as a corporate citizen these days and ever. So whatever we are thinking, it has to be safe and sound, and we are thinking of, let's say, paper reduction. How do we digitize and reduce our carbon footprint? Those are some elements we are trying to bring in as well. And these 4 words that I mentioned are key to our overall architectural principles and the way we are designing our architecture.
Well, it's a great: trust, modern, connected, green, all really good bywords. And so, Vinay, as we think about these new trains and new destinations that we're going to be running to, would love to hear your views on what are some of the really interesting observations that you've seen around the globe that should give some inspiration to what we should be aspiring to do here.
Yeah, this is it's actually good timing for that question, because even though many of these markets have been in various stages of advanced modernization, in some cases for a few years, it's really in the past couple of years, 12 to 18 months, I would say, that we've really seen use cases actually coming to life, commercialized, customers using them, and a reasonable amount of volume going through. So I'm going to go through a few examples in no particular order. The theme that I think you'll find they have all in common is that the effective services, the effective use cases are the ones that start with the customer, right? And their pain points and their challenges. and address those from their point of view rather than coming from, here's the payment rail or mechanism and its capabilities. So one area which is particularly big in the US is integrated payables, and particularly integrated real-time payables. The notion that in the end, right, small businesses and corporations, they don't want banking services. They don't even want payment services, right? They want payables. They want to be able to connect their ERP or accounting system essentially directly to their counterparties, right? The fact that a bank is in the middle is necessary, but it's not what they're really looking for. So with real-time payments, if you look, there's many great examples out there in the marketplace. I'll select Bank of New York Mellon. That's a bank that we've worked with quite closely for several years, having processed the first US RTP with them. They've done this at a couple of different levels. So their real-time disbursement service, for example, lets a customer, input a file or call an API with a payment instruction. And based on what's in the instruction, right, if there's a destination account, it will get sent to the TCH RTP network. If there's no destination account in email, it can get sent via Zelle or some other mechanism, right? So it's a real-time payment experience, but not necessarily linked to any particular rail. And what they've done more recently is they've extended that to e-billing and real-time bill pay. Ultimately, that's based on the capability for request for pay, which is in the TCH RTP network capability. And what that allows banks and ecosystem participants to do is really integrate all of the supply chain data that goes with the payment. To Asad's point, it's not just the payment, it's the fraud, it's the bill, it's the supply chain information, it's the purchase order, it's the invoice. All of that with ISO 20022, can be integrated in. Another couple of examples. One of the ones I like because I've used it is the HSBC collaboration with Transport for London, where once upon a time, if you went in the tube, you bought an Oyster card, your only choice for getting a refund was, to go to a booth in one of the stations. But TfL put in basically a beneficiary portal where someone like me, anybody can put in the number off the Oyster card and get the refund, in my currency, in my preferred payment method, right? And you can see how that can be extended to really compelling experiences, like increasing access to cash to the unbanked, right? Instead of getting a credit to your card or a payment to your account, maybe you don't have an account. Maybe you go to a kiosk or an ATM and get cash out directly. So a lot of these, the theme is put customers in charge of their payment experience, let them get money the way they want, and quickly, right? And the third example I'll give is government payments, right? So some of the countries in Latin America, for example, UAE in the Middle East or Singapore, have really pushed the envelope in terms of having payments coming to and from the government really go along those new rails, right? So in the last year, we've seen this with stimulus payments. In the US and I believe in Canada as well, many of these are still going out by check, right? And there have been problems in the US with that because of checks going to people who don't deposit them or they're not the right person or what have you. But if those things are mediated electronically, all an eligible person has to do is really log in, provide their identifying information, and again, they can get the funds in whichever way they want. Actually, I'll go one more if you don't mind, which is fintech partnerships, right? So one of the very beneficial side effects of modernization is the ability for banks to create innovation, to create new services without doing all the work themselves, right? And ultimately, you've got to have the right technology layer to do that. But the example I'll give is Goldman Sachs and Citi, who recently inked an agreement with Stripe, right? Because Stripe is getting into providing merchant services directly to businesses. And GS and Citi, again, because of the technology architecture they've been built, were able to do that. And it's a new direction for transaction banks. That's a kind of partnership which really hasn't happened before. So it really opens the door to many different types of innovation. And yeah, I could probably go with 5 more examples, but I'll stop there, Todd, and everybody, because I know we have other things to go to as well.
Well, that's great. If you look at the amount of technology that underpins that, So it brings some meat to the story around, banks are just technology companies that happen to have a banking license, right? So when you think about this eminent role that technologists are going to play in the future, what are some of the powerful ways that you think technologists should be looking at bringing these new experiences to life?
I wholeheartedly agree with that statement, with Vinay's statement of we're a technology company with a banking license. I see that day in and day out. I'll a little bit look back. So let's say about 5-6 years ago when we started the payments modernization journey in Canada, the go-to architecture from a technology point of view was Hub. That was the most viable architectural principle, and we designed around that. A few years down the line, now you're all talking about streaming services like Kafka, microservices, and tomorrow we'll talk about something else. But those 4 words I just mentioned earlier to your question, Todd, being trusted, being modern, being connected, and being green, those haven't changed. If you look at the business problems, if you look at the efficiency requirements, if you look at the operational hurdles, pretty much stayed the same throughout our journey with the architecture. So I'm not discounting the fact that we would need modern technology, new technology coming up, and we need to assimilate them into our technical ecosystem. But I'm also not discounting the presence of the heavy legacy architecture we still have, which Vinay was alluding earlier. So we do have a 40-year-old mainframe system. We do have a month-old, let's say, a cloud infrastructure with all the microservices. And I can only see business value if I can utilize value from both of them equally at the same time. So that's the challenge I throw to my technology counterparts and my partners and my colleagues, always saying that, hey, how do we see that value coming out of all the assets that we have acquired and to solve this problem? And I'll also circle that around with the strong problem of safety, security, and resiliency, and that's also key. We cannot do something from an architectural or technological point of view, which is advanced from a functional point of view, but will compromise my safety or my resiliency point of view. So these are like strong dependency-oriented points that we always trade off. However, I'll also put a silver lining there, saying that since we'll be working more and more with the rich data of ISO, we always try to prioritize or give an upper hand to anything that utilizes the data, creates value out of the data. So a modern technology like Kafka data streaming, the microservices pieces, how do I access the data, how do you process the data, those are getting upper hand a little bit on the technology point of view. Things that will provide us an like gateway to the legacy system, what Vinay was mentioning earlier, like a transformation layer or something that we can still utilize the value of a legacy system, will also be important going forward. Volume overall, maintaining the technology that we have, and like absorbing the surge like we saw during the pandemic period. Suddenly the digital payment volume went up. How do we make sure that our infrastructure and overall technology can handle those surges? Those are some things that we have to keep in mind. Overall, again, I will mention the basic guiding principles of a good architecture haven't changed. They still holds true. Being resilient, being as much as reusable across the bank as possible. If I'm building like a data store for payments, it should not be only solving payments problem. It might be solving other problems in the bank as well. Being resilient as much as possible, and a little bit going towards like a strategic way, not always band-aids. That's another thing that we have to keep in mind.
Those are really great comments. And we think about the bank as being a technology company, but the bank still has to make products.
Yeah.
And so, Dougal, maybe I'll pass it back to you so you can talk about what are some of the big products and innovations that you're going to be looking to bring to your commercial clients and others in this brave new world that we've been talking about.
Yeah, I'll say what I'm allowed to say, Todd, without showing too many cards. Maybe just start with a look back in the rearview mirror. I'd say some of the recent innovations that we put into market are sort of, I would characterize as a little singular in terms of early stages of the journey, right? So going back to one of the key pillars of modernization around transparency, taking advantage of the capabilities of the Swift GPI to enable a better mechanism for corporate commercial clients to be able to track and trace things. Now, that's a first step. Getting into the real-time payments game, enabling new services through e-transfers, et cetera, for our commercial and corporate clients. Again, another first step type capability, but it really comes down to how do you actually start to now compile an asset base that's actually going to be the platform for innovation that's going to allow us to derive new products and new value from it. I think we're definitely transitioning from a bit of a product minded kind of push. Clients aren't exactly coming up and pulling things off the shelf. I think our history at Scotiabank has shown that the flexibility and the nimbleness that comes with an adaptable layer that allows you to do different integrations that derive better value for the end consumer and end user is important. And that comes from being able to know what assets you have, where you can draw from them to compile sector-specific solution sets or case in point or point in time type solutions that are actually going to solve bigger ticket, higher order business problems for the corporate and commercial client base, because some of these things come with a fairly heavy value prop to them in terms of the size of the prize on the client side, and unlocking that value from them really comes down to the toolkit that you're able to deploy and that we're going to be able to deploy for them to take advantage of. And so just looking at some of the things as we go into this on-demand, real-time, always-on world, it really comes down to those on-demand services and how you start to package those or distribute them in ways through ecosystems that the customers are playing in and reliant on to affect that end-to-end digital journey. I'd say that right now at this standpoint in modernization, whether we're 5 years on or 3 years on, depending on how you count it, the reality is that some foundational fundamental elements are now hitting the market, not just on a FI to FI basis, but at the center. And it's going to come down to what can you do with all of those, to Asad's point, to actually create something that's going to turn a journey on its head and really deliver brand new value for our clients. We're seeing that across our global footprint. We do a lot of business in LATAM, and some of these things are starting to pop up all over the map where we do business. And it's important that we look at how we leverage those experiences and tie together something that delivers a bigger value prop than that singular product that maybe historically FIs have been akin to push.
Well, we look forward to seeing these new innovations come to market. So last comment before we go into the Q&A, all directed to you, Vinay. We've heard a lot today. What are some of the key messages that you'd like to underscore for our audience?
Sure. So I'll go with two key messages, right? And I'll start with if you're a business leader, right? Then I think the theme of everything that we've talked about here is really focusing on outside in rather than inside out thinking. Inside out is starting with the bank, the payment capabilities, the rails. Outside in is really starting with the customer, and that means really listening to the customer. So I know we all say, hey, we listen to customers, but again, I'll give you a very specific example. Over the last 6 months, we've seen a lot of interest from corporates in ISO 20022 and real-time based services. Now, we are primarily a provider of technology to banks, right? But we see the corporate demand because what they're telling us is, hey, our bank doesn't have these services. When we talk to banks, often the conversation goes like, well, our clients don't need that. They're not asking for real-time payments. They're not asking for ISO 20022. But then all it takes is a couple of further questions, right? Well, okay, are they asking for faster receivables? Do they want to receive money faster? Yes, they would like to receive money faster. Would they like to get more data with their payment? Would they like to reduce reconciliation and fraud? Yeah, absolutely. Would they like all this integrated into their supply chain? Of course, yeah, that's what they're looking for. Well, turns out that's exactly what ISO 20022, real-time payments, and all APIs, open banking, that's exactly what all these things enable. So the outside-in perspective is really, really important. If you're a technology leader, then ultimately your success is determined by how well you're able to meet the needs of the business. And what that means is this is a really amazing opportunity to rethink the technology approach to payments infrastructure, right? So you've got the spanking new rails. Now, what kind of trains are we going to build and how are we going to do that internally? And Asad's point, I would say, is unassailable, right? Most banks have the old stuff somewhere, right? The mainframe systems, the systems that are 20 years old, or 10 years old, and brand new services, right? But the reality is that unless you are more on the brand new side of that spectrum, bringing some of that technology incrementally in, you're really going to struggle because even if you have your version 10, let's say, of something that was released in the late 90s, that is still a legacy system. The new players in town are playing completely different tech games. Think the kind of technology that Amazon, Facebook, Google run, right? Modern payments platforms, very different from legacy payment systems or even hubs. Typically microservices-based, API-centric, run natively on the cloud, hybrid models, inherently real-time, 24/7, and typically, they are ISO 20022 fluent front and back. And the fact that they can be deployed in a modular way is really very powerful. So again, depending on which of those buckets you are, business leader or technology leader, that would be my counsel. And I look forward, to taking questions and discussing further in our virtual stand and perhaps in the future in person as well.
That's great. So awesome panel. Thank you very much. We got 9 minutes left for Q&A, so we're going to go into a bit of a speed round. Dougal, I'm going to start with you. Your predictions, top 3 new products, that banks are going to bring forward, and how are they going to generate revenue by doing it?
I get that question every day inside the bank, Todd. It's a great question. So where are you going to make money from all this stuff, and what's going to come? I think we've all seen globally the amount of pressure that's on the card model. There's a lot happening to kind of erode that the merchant services space and renovate and do things new. Pressures from regulators, pressures from consumer expectations, pressures from merchants looking for lower cost of acceptance. I'd say there's something to be done there on the account-to-account side of things when the real-time rail is up with a ubiquitous sort of way to get at it. I think on the data side, I have yet to find something here in terms of a holy grail, but I could imagine that everybody's seeking it. But the ongoing conversation around ISO is sure to yield interesting new ways of doing business with our clients and potentially taking different business models that maybe were reserved for upmarket segments and bigger, lower risk client bases down market based on the intelligence that you be able to derive out of that new sets of data that are on those core transaction sets like wires and now faster payments. Those are I think the 2 biggest things that are going to be driving what's to come. I can't say what's new with a nod to the cross-border space. You look at what's happening there. Payments are becoming so borderless. Swift is actively connecting and knitting together these real-time rails that are popping up. I think it's going to have a massive implication for the transfer of global value over the long term. So
that's great. I think next question I'll push to Asad. We're adding a whole bunch of new complexity. We have new payments methods. We got new payments rails. How are we still going to make this all be integrated and ideally a simple experience for our clients?
So if you look at our mobile apps, it's one of the most downloaded apps, and then it really simplifies where you want to send money. And in the back end, and in the behind of the scenes, is one of the frequent most agile teams in the bank. We have weekly releases, and we are upgrading, improving our apps in terms of how do we send money to each other on a weekly basis. It's simplified. It will be further simplified from a retail point of view. From a commercial point of view, yes, we are working with our customers and the industry to make sure that experience, that legendary experience, is also present in our commercial segment, and lots of investments, a lot of new things are happening in the commercial segment as well. New interfaces like APIs, along with other old school formats like messages, mailboxes are there. So overall, there is a great, I would say, priority to make sure that our customer experience on how they're interacting with our payment systems and overall in the bank in general, it's improving on a daily basis. It will take some more time, but it will continue. It's an evolution.
Thank you very much, Asad. Next question I'll push to you, Vinay. So when you think about all these networks, so we can go from Toronto to Oakville pretty fast, but how do I get from Toronto to New York, or go from all the way to Beijing? So when you think about this global world of fast national rails, how are you thinking about the future of interconnectivity, within a country and between countries?
Yeah, that's a terrific question, and ties back to Dougal's point about cross-border payments and cross-border transactions. And we actually haven't spent a lot of time talking in this panel about that. Probably should have, but that's an area where beyond real-time payments, probably the highest degree of modernization and change is taking place, right? So we're all familiar with the SWIFT GPI model, and we know what SWIFT has done in terms of connecting GPI to domestic instant payment systems, for example, in Australia or other parts of AP. And this is happening all over, right? It's happening with P27 in the Nordics. It's happening with multi-country RTGS in the Middle East with Buna, for example. So on the back end, if you will, network end, this is already happening. There are networks converging and connecting in different ways. And a lot of this is made possible by the fact that most of these are now ISO 20022 based, which makes it easier for them to talk to each other. What hasn't happened yet needs to happen is the ability for banks and FIs to provide those services, those multi-network services to customers, so that a customer no longer has the experience of making a SWIFT payment or making a payment through Ripple or Wise or whatever. They have the experience of, I'm making a cross-border transaction. And that could be a retail customer, it could be a small business customer, it could be a large corporation. But ultimately, it's the ability to make that money move. What the bank needs to do, coming back to I think the first question or the second question that was asked, is really simplified so that is the experience, and the bank takes care of the routing, right? So if it's going to Beijing, maybe it goes through GPI and something else. If it's going to Stockholm, maybe it goes through regular SWIFT and then P27. But ultimately, the rails are there, and it is going to be possible to do this. So it's the opportunities there for the taking.
So last question, and it couldn't be a payments discussion without CBDCs, cryptos, and stable coins rearing their head. So I'm going to give each of you 30 seconds on what do you think about how digital assets will play out into this world of new trains and new destinations. Todd, I'll start with you. 30 seconds.
We're actively monitoring. We do have a team looking into these things. We can't talk about all of that publicly, but we do have an active interest, and we're monitoring very closely.
Cool. Dougal.
I think implications are potentially massive. We have to see how it shapes up. A few different CBDCs have been launched across our footprint so far. Sand Dollar Bahamas as a good example. They have the opportunity or potential to unlock a bunch more value, especially when you tie the interoperability and the programmability aspects to it, and stretch this thing way out into IoT and the future of how devices interact. I think there's a lot that is unknown, but it's clear that there's some potential opportunities here. How it relates to what we're doing right now today, huge question mark.
Okay, Vinay, 30 seconds to you.
Yeah, no, I'm bullish on it. I think that within 2 or 3 years, CBDCs and blockchain-based forms of exchange of value will become normal. But when I say normal, I don't mean that they will take over from other things. I mean, we're still writing checks after all. It's just that the universe of possibilities for exchanging value will continue to expand. That's good for consumers, it's good for businesses, and I think it's good for those of us who are providing those services and providing technology to provide those services. So I'm very excited about it.
Well, that was an awesome panel. Thank you very much. Time just flew by. So thanks to Volante for hosting us. Thanks to our 3 panelists. And this is an awesome conversation. So feel free to continue it at the brain date sessions. Thank you very much. Cheers.
Thank you. Pleasure.